Hey everybody, Mark Panazon here, partner mortgage broker with Mortgage Connection. Hope you're having a fantastic day. It's Wednesday, May 15th, and it's time for the monthly mortgage market update, focusing on the changes from last month to this month. So, as always, we start with the charts. So, the first chart we're digging into here is the Canada 5-year bond yield, also known as the 5-year fixed rates or the main metric. So if we look back here 1 month's time, so around April 15th, right around here, what have we seen? Well, just a bunch of up and down, it looks like. So the bonds dipped a bit, increased, big drop. I thought this might have been the big drop heading and breaking this trend line, but then it touched this trend line here and have responded. Then today we've seen this big drop, a 3% drop in the bond yields again today. So funky business, kind of hovering around this 200-day moving average that you see here in blue. But nevertheless, definitely a trend. After this big move down here from October to December, we've done nothing but climb up here as we get closer and closer to that next Bank of Canada meeting to decide if rates are moving up or down. So to bring this in and give it full perspective, we're going to bring in the variable rates, the overnight lending rate, which is the red line here. So this is kind of the number we're waiting for. While bonds have been chopping up and down, up moves, Bank of Canada hasn't moved the overnight lending rate since July of last year. So it sounds like that could be on June 5th in the next meeting. And if it's not June 5th, there's a meeting in July, and then there's a meeting in September. So it's a ticking time bomb, just waiting for that rate to eventually drop and hopefully cascade down and give a lot of this back. And keep in mind, as I move to the weekly chart here, as a friendly reminder with fixed versus variable rates typically are not higher than fixed rates. This is an inverted yield, I believe is what they call it. And so if you look back in history, since 70 or so, there's only been a couple times, like maybe 1, 2, 3, 4, 5, 6 times in the last 50 years or so that the variable rates have been higher than fixed. So I have literally no reason to believe why this won't decrease and then maintain underneath the yield line here. So just patience is the key of the game. If you're renewing your mortgage or if you're going to buy a mortgage, you really got to start thinking about variable rates. I'm not suggesting that is the play. It's not financial advice, but just start thinking about the variable play, as this thing probably will start tumbling down. So with that, we look at what the Bank of Canada's most recent monetary policy report suggests. And now we have that 5% overnight rate, which hasn't moved. They're pricing it in June currently at a rate cut, another rate cut in July, another rate cut in October and December. So we're still aiming for that 1% cut this year, and then also that 1% cut next year from 4 to 3%. So still a 2% rate cut is what the experts are saying, which would move this red line here, 5%, down to around 3%, and roughly by the end of 2025, which puts it somewhere in here. So hold on to your butts. It could be a bumpy 2 years, but hopefully for the better. If you look at some other third-party estimates, they're a little bit different. So this one by WAWA is projecting that the overnight rate will drop only 0.5% by the end of this year, and then 4.5 down to 3.75 by the end of next year. So that's about 1.25. So much more conservative estimate here by WAWA. If you look at current interest rates, the range of interest rates are from 4.34% and up, all the way to 5.5%. Keep in mind, this tool we use doesn't have all of our lenders, but it does have a good chunk of them. Only 22 are showing out of the, I don't know how many we got now, 90 plus lenders. But most of them are the lenders you're going to see on this screen here. So if we want to look for the best 5-year fixed, and we'll keep in mind, the best rates are for insured mortgages. That's less than 20% down payment. ATB still leading the way at 4.84 on a 5-year fixed. If we're looking for a 3-year fixed, which is sort of the next best option, it's ATB Scotia with these 4.99s. They've had those for a few weeks here. And then if we're looking at that variable, The best deal right now is CMLS came out with this offer, which is effectively prime minus 1.05. So prime rate is 7.2. So you'll see a bunch of these lenders have prime minus 1. Some of the banks are not very aggressive on the discounting of the variable rate, but you can find all these other lenders that are giving you a really good deal on the variable. So you could pay 6.5% for the interim, and then as rates come down, if it in fact does come down 2% over the next 2 years, that 4% rate would look a lot more attractive than, say, the 3-year fixed or the 5, by a whole percent or 1.5%. So that's sort of the quick snapshot of the market. Inflation controls everything. We know this. So if we bring in the inflation number, kind of chopping up and down again here, so you can see that last month, April, let's see here. We don't even have the April data yet. So 2.9% is inflation, so that hasn't changed. But again, if this ticks down and gets closer and closer to this 2% target here, that's going to be even more emphasis for the bank to start cutting rates. What else has impacted the market? Well, let's look into inflation a little deeper. So right here, I just have the latest snapshot of the CPI March data. And I wanted to show you the 12-month percentage change on shelter specifically. So shelter, which is rent, mortgage costs, etc., represent 28% of the inflation number. And if you look at across Canada, we're seeing basically a 6.5% inflation on housing costs, or as they call them, shelter costs. So even though inflation is 2.9%, within that 2.9%, a huge chunk is shelter, 6.5%. And look at our own hometown here in Alberta, 10% inflation right now on housing costs, rent increases, mortgage payment increases, insurance, all sorts of different items in here. So we get that rate coming down. I anticipate that would help the overall inflation numbers come down as well. But what else is kind of impacting some of the decisions the Bank of Canada will be making? And that's one of them is employment changes. So we have this gaudy number of 90,000 jobs added in April, which is the most in 15 months, which was followed by a 2,000 decrease in jobs in March. What's interesting is there were 40,000 full-time jobs added and 50,000 part-time jobs added. So a lot of people changing jobs or getting jobs. What's really interesting is it's almost a 50-50 between full-time and part-time, and more part-time jobs than full-time. So what could possibly that mean? One theory I have is that these baby boomers, in the 60 to 70 year range, are starting to retire. They're starting to leave their employment, and some of them are looking for part-time work. So just total speculation, but I would suspect that some of these boomers are entering the workforce on a part-time basis. Could also be immigrants, students coming from other countries looking for part-time work. It's really boosting this number up. Overall, unemployment mimicked last month at 6.1%. So, trending upwards. That's another signal that the Bank of Canada will certainly like to keep this number down. We don't want high unemployment. So what would help that? Well, dropping interest rates. If you look now to the Canada Housing Plan, which was announced in April, so last month, the Liberals announced a bunch more spending and this gaudy number of 3.87 million homes by 2031. So if we do the math on that, that's about 500,000 homes being built per year for the 7 years. And I'll just pull up a calculator just to verify my numbers here. So 3.87 million divided by 7 years. Yeah, around 550,000 homes being built per year. Well, how did we do in our first month? 240,000. Now, to give maybe a little bit of relief or leeway with the government, it's the first month, so maybe we'll let them ramp up a little bit. But just in my last video, Canada's never built more than 320,000 homes per month, and now we need to do 550,000 homes per month based on this Canada housing plan. Great plan, guys. Just a bunch of lies. We'll see what happens. Next up, home prices. So focusing on the Alberta market here, you can see that prices are up. So you can see on total residential from April 23 to April 24, slight bump. You can see single family homes, slight bump, apartment, townhouses all up. You can also see here sales are way up, listings are way up for the past 3 months or so. And look, average days on market down. So what does this say? Well, homes are selling and they're selling fast. So the market is moving. We need those homes built. We need to stop immigrating, at least temporarily, so we can catch up with the demand. Otherwise, we're just going to get this thing spinning out of control. Look, there's only, where did I see that figure? Here it is. 1 month, 1.7 months of inventory for total residential units in Edmonton. And that's crazy. There's no homes for sale. There's less than 1 month of inventory for townhouses, semi-detached. There's a little bit of condos, 2 months worth of inventory, but yeah, things are selling fast. A lot of people moving to Alberta, and that's just driving up the demand like crazy. The last chart I wanted to show you was political. I don't like to dive too deep into the politics, but this is starting to get a little out of hand. If you look at the Canadian federal polling based on 338canada.com, the Conservatives have jumped out way ahead from about, summer last year, the movement sort of started. And you can see now they have, a massive lead here. 44% of the popular poll or a popular vote is going to the Conservatives. So the Liberals are taking a beating right now. The election is next fall, so we have about 1.5 years left, a little bit less, before the election happens. NDP is kind of humming around the same. So it'll be really interesting to see what happens in that regard. But yeah, like 18-point lead, 20-point lead here based on all these different polling firms. That's massive, and that says a lot. And the reason why I bring this up is because I think one of the biggest complaints that I'm hearing being a mortgage broker is housing, of course, and we just have to look at the data. So not a lot of homes for sale, very expensive homes for sale, high interest rates. Canadians, just want to have an affordable home. So we'll see what happens. I hope this information has been helpful. You guys have yourselves a great month, and we'll see you guys next month. Take care.